The following is a presentation of TFNN.
This story began on a nice Florida winter day, December 10th, 2005, when lone fishermen in Mosquito Lagoon, out near Cape Canaveral, discovered a crab trap that appeared to have something caught inside of it. As the fisherman looked closer, he noticed that a baby dolphin was tangled in a rope that had cut off the supply of blood to the dolphin's tail. The fisherman cut the rope and called for help because he saw this dolphin was struggling. The dolphin, later named Winter, was brought to the Clearwater Marine Aquarium, but too much damage was done to her tail, and it could not be saved. Now, folks, the greatest gift you can give anyone is the gift of your attention. And that is exactly what Winter received from a group of prosthetic engineers who created an innovative new design for a prosthetic tail. Winter, she's doing just fine, and her story of survival and success has gone on to touch others, many, many others. These are folks that need a more flexible prosthetic. We can't control the circumstances of life, folks, only how we respond to them. Circumstances are like the wind. Learn to set a good sail, folks, and let the wind take you to your dreams, your treasures, and your destination. Welcome to TFNN. We're glad you're here and you have our attention.
It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the September 28th fantastic Friday edition of today's opening bell on the Trader's Edge. Folks, I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome is to help you to become a better money master and to provide you with the tools that will help you to lead an inspired life. Because, folks, leading an inspired life, that is what it's all about. Let's go take a look at one of our tools. I love this tool. This is called Your Life Becomes What You Think. This is not the first time you've heard me say it. It's not the first time you've heard anybody say it out there. And thought, folks, when you think about it, thought and the act of thinking is one of the greatest powers that each of us possess. And like most powers, it can be used either positively or negatively out there. So let me ask you this question. Are you more positive or negative when it comes to thinking? Something to think about. In fact, you know the answer right off the bat. You could write it down on a piece of paper. You could blurt it out if I could hear you. You know, and there's not anything wrong one way or another. It's just the importance of understanding, really the importance of thought, but more important, that your life becomes what it is that you think out there. And, you know, folks, life is a mirror. And life will reflect back to us exactly what it is that we see, exactly what it is that we think. You know, if you've listened to me, you've heard one of my favorite expressions, which is turn your mirrors into windows. And what I mean by that, you know, it means that look in the mirror, see the person that you want to become. Why do I say the person you want to become? Because each day, each of us are always trying to get better. So, you know, you want to see, you always want to see things the way they are, but you always want to see things better than they are. So when you look in that mirror, you know, like on myself, sometimes I see a little fat gut there, but I see myself better, and each day I'm taking steps to get rid of that. So, you know, and as well as many other things, because there's always so much more. We've got so much more potential out there. And then when I say turn your mirrors into windows, you know, when you see what it is that you want to become, folks, then it's a matter of just simply jumping through that mirror. That's how you turn those mirrors into windows. You know, we can and do control our thoughts, folks. And Thomas Edison, I love Thomas Edison, Thomas Alva Edison, because he wasn't born in Michigan, but his parents moved there, so not too far down the street from where I was raised as a little kid. And he was quoted once as saying, it's remarkable to what lengths people will go to avoid thought. Now, I know that doesn't include any of you listening in out there, but think about all the other people that you see around. And, you know, it's unfortunate, it's sad to think about, but actually it's really pretty true. Now, Thomas Edison, he absolutely has touched each of our lives out there. Think about it like this. When it comes to thought, what's the expression that we use when we finally get something? You know, when something just kind of triggers in our head. In fact, we use it in the den all the time. That's right. It's like a light bulb went off inside our head. Now, Edison, he had tons of light bulbs go off in his head. In fact, he's the fourth most prolific inventor, you know, in history. He's got over 1,000 patents out there. In fact, Thomas Edison I guarantee you, for anybody that's a trader out there, an investor out there, he's touched your life directly. Why? Because he actually invented the stock ticker. I couldn't do this show out here without my electronic stock ticker. I wouldn't be able to give you the information out there. He's the guy that founded it, amongst many other things, many great companies out there. He founded General Electric. And General Electric, I'm going to show that chart up here because I use General Electric's chart as now a divergence indicator out there. It's not a moving average. It's not A to B equals CD. It's not a Fibonacci. It's just simply a indicator that we can use to identify divergences when the Dow is moving in one direction and GE is moving in another. Well, GE took out its highs yesterday in the daily chart with volume. It's moving up. Even though we've got futures trading down here this morning, you've got the Dow off 60 points or so. The ES Mini, hit oversold conditions coming into about the 8:30, 9 o'clock hour. It is, trading at the 1435. It's trading right where we began yesterday's show. It was a wild ride out there, but really flat if you take a look at 9 o'clock yesterday versus 9 o'clock today. So I think Edison, that what he thought, folks, was he thought positive thoughts all the time. And you should think positive thoughts, too, because your life becomes what you think. And I think, folks, you're absolutely amazing. So let's go have an amazing Friday, an amazing weekend, and an amazing life out there. So let's go take a look at these charts. If you are listening to us either on tfnn.mobi and or the radio, thanks so much for doing that. You can also listen to, or you can also catch an archive of the show on Channel 9 on Tiger TV. If you're looking at Tiger TV, we're looking at that 30-minute chart. We take a look at yesterday's move up. What did it do? It moved right into the sweet 618 area. I mean, dead solid, perfect out there. And we take a look at the sweet 618 area. We talked about it in yesterday's show. We were looking at the movement between two sets of swing points, two major intersections out there where we saw a total change in direction in the marketplace. That swing point high that we were looking at was the one that came in on the 30-minute chart at 11:30 out at the 1457 price point. That was on September 25th, a couple of days ago. Amazing. We're coming to the end of the month of September when it comes to trading today. And that was a swing point high. The swing point low came in at about 11 o'clock in the morning on the 26th. So 2 days ago when the ES Mini got down to 1424 out there. Now, there was absolutely a divergence as well as that low was being made. I'm not going to go straight into that. Let's first just finish up the 0.618 retracement. If you go from high to low and you just simply put on your Fibonacci retracement ruler, 382, 618, and 786, that's all that you need from a retracement standpoint. Most times you're going to see just simply as normal breathing patterns, equities, currencies, commodities, anything that you trade, move back into that 0.618 zone. In this case here, you actually completed an A to B equals CD. You also had a bearish engulfing candle as that area was being made. 1444.50 would have been the exact number. And what the ES Mini hit yesterday at 2 p.m. was 1444 and a quarter. Oh, it's actually on my chart here, 1444.39. I guess we could go either way. Of course, it was the bearish engulfing candle that was created at 3 p.m. yesterday. That's the one that hit 1444.50. You got confirmation on that next session. And let's go take a look at the two retracement levels that we can see coming off of swing point lows, one being at 11 o'clock yesterday morning on the 27th. That low out there was 1430.50, all the way up to that high that came in at 3 p.m. Sweet 618, 1433.50, 1430.50. I'm sorry, that would be 0.786. My apologies there. What you did is coming into the 9 o'clock session, ES Mini getting down to a level of 1432, finishing it off there. You don't see a bullish engulfing, but the ES Mini on the intraday 30-minute chart getting a little bit oversold. That is one of the reasons what we are seeing a little bit of a bounce out here, although mild and brisk. Now let's go take a look at the daily charts out here on the futures, see what they're doing. And where we really should start here is with the Russell 2000. Why? Because that has been the weak link out here. If we take a look at the Russell 2000, what we're noticing out here is the first date is September the 11th out here. Actually, it should have been September the 13th. I don't know why do I have September 11th candle out there. It really should be this candle up here because that was QE3 day, I believe, was September 13th. Yeah, no. Well, somebody will have to tell me out there. Pretty sure it was September 13th out there. And you can see right now that that is the area that is under attack on the Russell 2000 futures. The real area, so there's a couple lines of resistance. There's the Federal Reserve QE3 line of resistance, and then there's the Super Mario support, I should say, the Super Mario support level. That would be the September 6th date. That is down quite a bit. That is out at 820.80. You're traded 836.60 in the Russell 2000 futures. Yesterday, little bull sash candle out there. We'll see if today's got any follow through. But the market really behaving like it should. Yesterday, as it was coming into that 3 o'clock time frame, as it was making that sweet 618, as it was completing an A to B equals CD, was supposed to go ahead and pull back. So it's really doing everything that it should. Just simply normal breathing patterns out there. If we go try to just kind of jump around here just for a moment, let's go see what's going on inside the currency market, see if there's any disconnect out here. Right now, you've got King Dollar back about 3 pennies. And if we take a look at King Dollar, I've got the 10-minute chart up here on the screen. So as the King was pulling back, what the King was doing, the King was completing an A to B equals CD down. It was doing a 1 to 1.618 A to B equals CD down. You can see that move on the C to D leg had some power behind it. Why do I say power? Because take a look at how price was falling. It was on the inside of that C to D move out there. That's why you knew it was going to do more than a 1-to-1, do more than a 1 to 1.272. It may even do more than a 1 to 1.618. Haven't seen a bullish set of candles out there. We are seeing a move, and if you've got Tom's book out there, if you don't have Tom's book, you got to ask yourself why. Get the art of timing the trade. Folks, invest, in knowledge, invest in education. In there, he'll tell you that when you do a 1 to 1.618, you almost always see a change in trend. That's what we've seen here. We'll see if there's anything in this bounce here with the King trying to move higher, certainly coming into the numbers that were released at 8:30. Consumer spending was up about 0.5%. I think that was in line with estimates. Incomes rose 0.1% out there. And so if we take a look at the King doing exactly what it was supposed to do on the intraday charts out here. If we switch over to the daily, let's do that here real quickly as soon as I can. There we go. Let's see if I've got the daily chart here handy. I do. What the daily chart was doing, folks, if you take a look at the retracement from its leg down, its last leg down out here, that would be going from a swing point on August 28th, that high 81.84, all the way down to the low put in on September 14th, out at 78.60. The King doing what it's supposed to do, which is first make it up to that 0.382 level. That's what it did. Looked like we had, what kind of candle here? It closed on the 26th. The index closed at 79.89, opened at 78.86. So you have a bear sash candle out there. The normal retracement here, folks, for the U.S. dollar index, if it's going to try to move higher, would be to get down to 79.17. It's trading at 79.57 right now. Around the world, we've got the DAX in Germany, even though they started Oktoberfest last weekend. You got the DAX down 35. FTSE, though, only down 9 points. In Asia, a little mixed bag. The Nikkei off 79, the Shanghai up 31. We'll be right back, folks.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investment personality, your overall portfolio should reflect your financial goals, time horizons, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney LLC, member SIPC.
With the launch of TigerTV,
With the launch of
TFNN has
TigerTV,
brought our programming to the
TFNN has
next
brought our
level.
programming
With
to the next
TigerTV,
level.
you gain
With
access to
TigerTV,
each
you
host
can gain
chart
access
and
to each
computer
host charts
screen as
and
they host
computer
their daily
screens as
stock
they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pezzamento, Victor Jones, or Daryl Martin. You can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
80% of traders fail because they don't know when to get in or out of a market, and all because no one taught them how to read the signs. You see, the stock market has a universal language called Japanese candlesticks, and each day, the buyers and sellers, the bulls and bears, go to work and build signs. This language has been around for thousands of years, and it's easy to learn. I'm Steve Rhodes, co-host of the Money Masters Show, and I'm a master sign builder. Download my free report, Candlesticks, The Speed of Trust, on the homepage of TFNN.com for one of the best-kept candlestick secrets. I'll also be conducting an online course Friday, October 19th, to teach you the language of the market's sign builders. You'll learn the best entry and exit techniques and strategies that will create extraordinary rewards. The course will be archived so you can review it as many times as you like, because trading or investing without learning this language is like running a red light. It's an accident waiting to happen, and there's no airbags or seatbelts. All the details are on the homepage of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Look into Larry Pezzavento's new trading newsletter, Profits and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the market based on the patterns he's developing, and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, the dollar, the forex market, and you'll get the technical corner segment, which is a powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the astroharmonics and the stock market model that Larry utilizes for $5 a day. Extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. TFNN.com. Click on the free trial link at the top of the page. That's an $85 value. Yours free when you register right now. Get Larry's patterns, profits, and peace of mind, and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive of the newsletters for free at TFNN.com.
Welcome back, folks, as we take a tour around the world here. Let's start over in China. Let's start over at the Shanghai. Shanghai having another good positive session last night, up a total of 1.5%, almost 1.5%, up 31 points. Now, the Shanghai, this is going to be kind of interesting here. Let's take a look at the retracement that it did. Shanghai had a real sign of strength here. Turned out to be nothing more than a, it looks like maybe it's been a big short covering out there, a little bit of a squeeze. And not talking about the session on September 7th. Now, at that stage, the finance ministers in China decided they were also going to print money. They were going to participate in the money printing game. They have, I think they said their printers were just as good as Uncle Ben's out there. So that had a big move in there that was given up moved sideways for about 5 trading sessions, then moved lower, took out the area where it broke out from. That was the September 6th level. That low was 21.32. That was taken out on the 20th of September. Market moved lower 2 trading sessions ago. So on Wednesday, they came back out and said, didn't you hear me the first time? We're going to go ahead and print money out there. That moved their market higher. Didn't have the same level of conviction that we saw on the September 7th day. But you did have some follow-through last night. Now, if we just simply take a look at the retracement here, and I believe the Shanghai is closed next week for at least Monday and Tuesday out there, and I believe, or it could be closed for all week. We'll have to check into that maybe during the commercial break. However, what you can see here is that the Shanghai made it up to where? Sweet 618. That number, 2188.11. The Shanghai actually got up to a high of 2188.36. Oh, man, you got to love it. Now, here's the deal. You got a wide-ranging bar coming into that area. Of course, you're going to have the Shanghai offline here for at least 2 trading sessions. And what that says, though, is when you have wide-ranging bars coming into a retracement area, it says it really wants to go up to the next level. It says there's really not anybody on that floor that wants to be let off. So it looks to me like the Shanghai wants to at least go tag Sweet 786, one of our other retracement levels. That would be the 2213. Yeah, 2213. It's a 2184. Closed out at 2184 last night. Not the same story over in Japan, over in the Nikkei. So let's go take a look at the Nikkei. See what she did here, really giving back all of the gains from Thursday out here. Thursday's session opened out at the 88.56. You closed at 88.70. Now, the Nikkei here, what it did was it took out the B point of an A to B equals CD up. It did that on the 19th of September, has pulled back. If we go measure that pullback level, let's take a look at a set of swing points out here. We'll see that this pulled back just below the 0.618 level. So not a whole lot of information for me to gather here, unfortunately, because I don't have the volume on the Nikkei. Let's go take a look at what's going on over in Germany and then in the UK to finish things off here. Over in Germany, the DAX trading off of its session lows down to the 72.57 price point here. The DAX has taken out a swing point high with volume. It did that on September 21st out here. The DAX had already completed a 1 to 1.272. A to B equals CD. If we take a look at where the DAX is trading, it's inside the September 11th bar out there. I don't have it written down in front of me. The September 11th bar, you know, just not much of a pullback. In fact, if we just take a look at our last set of swing points out here, looks like a 0.382 level. That's what it's done, just a 0.382 retracement. So that, you know, is normal. If the DAX does get going from this point, that says it's going to have a lot of energy if that's the only retracement. And I'm talking about a shallow retracement here because I'm using a very, very small set of swing points out here. That is on DAXy out there. Let's go take a look at what we've got going on here in the pre-market. You've got Questcor Pharmaceuticals. They're the leader in the clubhouse dollar-wise on the way up right now. They closed out at $17.83, or trade out at $19.25. But we know that that has got some problems. And then right behind it is RIM. RIM closing at $7.14 last night, trading out right now at $8.15, up a buck. That's a pretty nice percentage. But we know RIM has got problems out there. Then you've got two other equities, Cytori Therapeutics, CYTORI. The actual ticker symbol is CYTX. They closed at 386. They're trading out at 454. They're having a nice healthy jump. Leading things to the downside, Apple closing at 681, trading right now in the pre-market at 678. Nike right behind them. They closed at 96. They're trading at 93 bucks right now. And Yum Brands right behind them, not having a yummy morning. They closed at 67.63, trading at 65.55. 877-927-6648. Don't forget, folks, 24 hours from now, we've got an incredible workshop. It's free if you're in the Tampa area at the Grand Hyatt. Go to the homepage at tfn.com. Sign up for it if you'd like to attend. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on TigerTV, as well as being featured as a regular CNBC contributor. And now you can have expert trading advice through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks and indices every market day. Market Insights comes out each market day before 9:30 provides traders with daily commentary, opinion, and trade recommendations on the market. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, market timing. Market Insights will give you trade recommendations, including entry and exit prices. The summer is over, and traders are back. Get your 2-week free trial to Market Insights by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. If you're a trader thirsty for knowledge, then we have the perfect event for you. Tom O'Brien will be hosting a live 4-hour dynamic trading strategies workshop on September 29th in the Tampa area. This one-of-a-kind workshop takes place from 8 a.m. till noon and is completely free. We'll even be giving away almost $2,000 in door prizes randomly drawn from those that attend live. Along with diagnostic trading expert Daryl Martin, Tom O'Brien will teach you how to identify and set up your trades using dynamic trading strategies, and Daryl Martin will teach you his diagnostic trading formula, including the strategy, system, and style that gives you an edge in this market. For more information and to reserve your spot today for the September 29th free Dynamic Trading Strategies Workshop in Tampa, please visit the front page of TFNN.com. Don't wait to act, as space is limited. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're off to the races. We got the Dow down 69 points. S&P's off 7. Composite down 13. Russell 2000 down 5. Lead the charge on the way down 0.6%. Microsoft up 2 pennies. Intel down 20 cents. Cisco up 33 cents. Google up $1.70 right now. Apple down $3.50 after having a strong showing yesterday. Apple trading out at $677.73 or so. Leading things on the way up, you've got China Kanghui. I don't know that I pronounced that right. I'm sure I didn't. Kanghui KANGHUI. KH is the ticker symbol, up $5.40. That's up 21%. Medtronic, okay, Medtronic is going to acquire that firm up there, and so they're paying a 21% premium there. You've got Accenture PLC. ACN is the ticker symbol. They're up $3.41. That's up 5% this morning. Cognizant Technologies, CTSH, up $1.74. That's up 2.5%. Everything else right now down, a buck or less. If we take a look at things dropping to the downside, you've got Apple leading the charge off $3 and change. We cover that. Nike right behind them. Nike down $2.50 right now. Yum Brands down 2.25. McDonald's Corp, MCD, they're not having a Happy Meal to start off their morning. Of course, I don't think those Happy Meals kick in until about 10:30 or 11 o'clock, if I reckon correctly. And McDonald's Corp off about 2.5%. We'll take a look at that. Carter Inc., CRI, down $1.79 as well. Again, our call number 877-927-6648. Let's start off taking a look at Apple. Apple doing everything that it really was supposed to do. If we we're looking at the daily chart out there. It's got one of my hammer candles. That is on September the 12th out there, folks. And if you don't know what a hammer candle is, then you want to go to the homepage of tfnn.com. You want to click on my free report out there, candlesticks, silent signals out there, because I'll teach you something. If you do trade hammer candles, or you do trade with Japanese candlestick charting, then you absolutely need to make it a must to go download that paper, because you will absolutely learn something out there. In fact, you want to understand now, sometimes these candles, they can disguise in the bushes and actually become something else out there. Well, in this case here, in the case of Apple, this really, the hammer candle that was created here on September 12th, acted as good. And what a hammer candle does, folks, is you get a picture of this if you're taking a look at. Number one, kind of looks like a hammer. I call it the sledgehammer out there sometimes if it's big enough. And if you take a look at that candle pattern, intraday on the 12th of September, the stock here opens up at $666.85. It was almost a devilish open out there. And so it opens at that level. Intraday pushes all the way down, so the bulls intraday were certainly in control. And when I'm talking about, or the bears were in control, when I'm talking about the bears began to come into control on September the 10th out there, when they formed a bearish engulfing candle. Got confirmed on the next trading session. So clearly you saw a change in trend, a change in polarity. You had the bears that were in control, and the bulls stepped in clearly here on September the 12th. But you can see intraday during that September 12th session, you opened at that 666 level. The bears took control. They pushed it down into the lows of 656, 10 points lower. By the end of the trading session, the swing point high, 669.90. It closed at 669.79. Almost doesn't get much better than that. Then on the next trading session, what do you do in Apple? Gaps up. Gaps up. That gives you real confirmation. That shows you the bulls are absolutely in control. They didn't, they let the bears have fun really for a couple of days out there. Then we have Apple trade-off. Now, when Apple was moving up, when it was making that hammer candle, 25 million shares. As Apple was pulling back into it, really a couple trading sessions ago, 20 million shares coming into the hammer of 25 million shares. Yesterday, taking off out of that area, doing 21 million shares, coming against that downdraft of only 18 million shares on September 25th. Basically, the bears don't have enough energy to take Apple downtown. That says Apple wants to go test the swing point high out there from September 21st. That's got 20 million shares, and it's going to be in that price range of $6.99 to $7.05. That's what the bulls and bears, when you just look at the signs and you go ahead and you incorporate volume into it, that's at least what Apple is telling me out there. If we take a look at some of these stocks here that are popping and dropping, let's start off with Yum Brands. See what Yum Brands is doing out there, gapping down this morning. Let me see if there's any kind of news behind this. Let me make sure it was really gapping down. I had to change a couple settings here in my system before we came back on the air. 65.21. Certainly, it is gapping down here. on Yum Brands. And Yum Brands announces what? Absolutely nothing. So I don't know what's behind the move out here. Let's go ahead and clear off the chart if I can. All right. So let's take a look at what Yum Brands is doing. This had set up a island reversal, got negated here on September the 25th out there, but it made a nice bearish engulfing candle. So it looks like Yum Brands, this is a small A to B equals CD down. The A point is going to be the swing point on September 21st. Your B point is going to be the low on September 26th. And then your C point was yesterday, September 27th. So already doing the 1-to-1, but gapping down through it, and that's what it's creating. Yum Brands wants lower price. Certainly when we take a look at A to B equals CD. Volume so far this morning, 867,000 shares. Right now going into a candle had 3.8 million, but 867,000 shares not too good necessarily from the standpoint of a only 10 minutes of trading. I do see a hammer out here in Yum Brands that held as support. That was on August 24th. The low out there, 62.90. Looks to me 62.90 happens to be the 1 to 1.618 A to B equals CD that we just laid out there. Looks like Yum Brands wants to go test that hammer support level as well. That was the August 24th candle. Let's go take a look at McDonald's Corp. They're not having a happy meal. Trading down a couple of bucks right now. MCD is the ticker symbol, and they're gapping down this morning. Let's go take a look at the volume behind this. Not really a great looking chart out here for sure, coming off of its highs, doing it looks like with a bearish engulfing on January 20th. Coming the highs out there were 102.22, trading out right now at 91.10. This has a high volume low out here that certainly wants to be tested. That high volume low, folks, is on August 8th, so 8/8/12. Did 14 million shares down there. So you got a high volume low, gapping down this morning. Volume so far behind this move, 1.5 million shares. Yesterday did a total of 3.8 million shares. So it's got some juice on the way down. It's going to come down and at least test the August 8th swing point. Whether it's the high or the low, we'll see. The area is 87.98. That's the high. 14 million shares. You start coming into it with accelerated volume, it will certainly go test the low out there. That being $86.15. That is on Mickey D. It's the end of the month. Let's go put out a monthly chart on this and a weekly, just see what else we might see out here. But it's always a danger sign out here. Well, it's got this high volume bar in McDonald's that takes you all the way back to October 2008. That is still sticking out there. That would be a high of 64.02. I'm not saying that's where it's going just yet, but I would say it would first have to contend with January 31st, 2011, out at the $72 to $77 price range. Let's go see what else we have going on out here. Let's take a look at what is popping as AZZ. I did say as Inc. They are up about 13% this morning. So let's go see what is behind their move out here. I don't even know what as does, but let's see here if they had some earnings. They raised their outlook up to a level of 2.25 to 2.40 with regard to their earnings per share. They expect revenues in the range of $575 million. Let's go see what AZZ actually does out here and who they are connected to. As Incorporated manufactures and sells electrical equipment and components for power generation, transmission, and distribution systems in Canada and the U.S. So let's go take a look at their stock chart, see what they've got in store for us. Gapping up this morning with some nice volume behind this. Oh, man, look at this thing here. So they're at all-time highs. Let me put this back here first on a monthly. Make sure, take this back. So it looks like this equity may have started trading in the 1997 level. So 1997, that's as far back as I go. A couple of bucks here at $39 here right now. This thing built cause from the time frame of 1997 really through about 2006 out there. So it has that was a little energy building that was going on inside this equity. Let's take a look at the ABCD patterns on the monthly chart. As long as we're on this, see what it has completed. So far, you can take a look at the power move out here off of the C point, busting through 1.272, which was $35.75. Looks like it gapped up through that this morning, on its way to 43.35, trading at 39.46 right now. Let's go take a look at the daily chart out here. You're seeing a couple of signs of strength. This actually is also, it's a third gap. You've got to go back all the way to June 30th out there. So let's not take a look at this necessarily as a three-gap play. Maybe there will be a three-gap play coming. But this had a nice sign of strength in the equity on June 29th out there. The high was $30.72, 583,000 shares. So not really the most liquid of stocks out here as we now take a closer look at what is really behind the volume on those candles out there. Nonetheless, a wide price spread, accelerated volume. The equity traded back and tested that area. Did it on August the 1st, coming back with 139,000 shares. Then you got a bullish engulfing candle. That was your signal on August 2nd that the test of the breakout was done out there. You had a nice move higher, and what that was setting up, A to B equals CD pattern on the daily chart that I would have used out there. We'll just take this set of swing points here. That was setting up that it was going to do a one-to-one. That is what it just did. $40.11 was the target. If you take a look at that, it got to 40.18 thus far in this morning's session out there. Pretty well. And then when it takes out the B point, let's just go see if it took out that B point with volume and gave you another signal there that it wanted to at least move higher. Let's take a look and see what the volume is on this. And as this thing takes out its B point, does it with volume. Does it on September the 11th out there with 313,000 shares. That is on AZZ as Inc. is the ticker symbol. Let's go take a look at Nike, see what she is doing out here this morning, trading down about 2%. I think I have the Nike chart out here. I won't look too long. There we go. We got Nike here. So trading, gapping down this morning, but looks like shareholders not buying into it. Now, Nike does have a high volume low out here. That high volume low, folks, goes back to June 29th. Gap down with 21 million shares. That area has not been tested. I'd be patient on this equity. You'd like to actually see what was that actually testing. That was testing a breakout area. Oh, that's a beautiful thing. So let's go take a look at this Nike chart here. Let's draw the lines across. So that's not a very good line. There we go. We got a better line now. Now, if we take a look at Nike, what I'm doing, folks, is going all the way back to June 28th. So on June 28, 2011, this equity here gaps up with 15 million shares. Very nice. Gaps up with 15 million shares. I'm going to pull this back and open it up a little bit so you can see it. And what it also did, so it's kind of a little consolidation. So now that we're taking a look at Nike, we've got the whole picture on the chart out here. As we take a look at Nike, it gapped down on March the 18th, did it with 19 million shares. Then it goes ahead and it gaps up here on June 28th. When it pulls back right into the area where it broke down, where it gapped down, but tested on much lighter volume. You had 19 million shares out there. It was tested on 5 million shares, and both for a couple of trading sessions throughout the period of August the 8th through the time period here of August the 19th out there. Then it moves and goes topside here, makes a heck of a nice run out there. If we take a look at, I won't draw the A to B equals CD pattern, but makes a run all the way up to that $114 level. Now what's it do? Gaps down, as we said, back in June 2012. Seems like it does a lot of work here in June, because in June 2011 is when it gapped up. So that must be a big earnings time period for it. So kind of an interesting pattern out there on Nike in the June time frame. You might want to even write that down and take a look at Nike come next June out there. But let this thing come back and try and test the June 29th area before you make any decisions. That is on Nike. Let's see, we've got the Dow down 101 points right now. Let's go see what kind of volume is behind that move. Let's go see if I can find my intraday charts out here on the ETF. So let's go take a look at the diamonds, see what the diamonds are doing. Did have a 10-minute chart. Let me just refresh the screen here, see if there's any big volume behind this. Give me a moment here for this screen to refresh. And so moving down here, taking out a swing point on the 10-minute chart out here. That swing point goes back to 11 o'clock in the morning on the 26th. That had 340,000 shares as it took out this swing points new with 357,000 shares. That's the 10-minute session that we're in right now that ends in about 1 moment. S&P's off 9, composite down 17, 877-927-6648. And again, folks, go to the homepage at tfnn.com. A great Nadex workshop, absolutely free. You can sign up for it on the homepage. It's tomorrow from 8:30 till 12 noon. An excellent education. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. For the next trading opportunity to magnify your perspective and maximize your returns. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report, with over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar. The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We've got the Dow off 107 right now. S&P's down 10. Composite off 20. As we take a look around the, let's see what else we got. King Dollar making its move up 19 ticks right now. Gold back $6. Silver down 17 cents right now. Light sweet crude off 30 cents. And let's go take a look at some of the sectors inside the S&P 500. Let's start off by taking a look at the financial sector, the XLF here. This morning's right now trading out at 15.55. It is below the September 13th Ben Bernanke date out there. That low was 15.68. Had volume, went topside that day, 140 million shares. As the market moved down into that area and took it out, did it with 68 million shares. That was on September 25th. Then on the 26th, 52 million shares. Yesterday, tried to get up back above it with 46 million shares. Still doesn't really have enough to break it down. Looks like, though, it is headed to the September 6th date. The high of that is 15.53. Most certainly it has already tested that. That is the Super Mario date. 52 million shares there. We'll see how this one here plays out. Looks like this could just simply be consolidating from the highs out there at September 14th in the 1644 range to the lows of September 6th out at 15.25. Let's go take a look at the energy sector. Let's look at the XLE. See what the XLE is doing out here, trading into a B point that it crossed with volume on the XLE. That was the August 21st swing point. That swing point high was 73.03, 8.7 million shares. As that B point was taken out, did it with 13 million shares. So you had conviction behind the move. That occurred on September the 7th out there. Right now, if we take a look at the XLE, came back into it, closed below it with 15 million shares. That was on September the 26th. That 15 going against the 14 million shares. And the 14 million shares on the 6th and the 7th out there. Rejected that area yesterday. Moving topside, again, that is going to be tested. Again, that's going to be 73.03. You're at 73.16 right now. It's gotten down to a low of 73.09. That is on the XLE. Let's go take a look at the two largest weightings inside the energy sector. See if they're giving any kind of signal out here. That would be ExxonMobil and Chevron. Just those two equities make up about 40%, I believe, 30 to 40% of the energy sector. I think it's ExxonMobil, Chevron, and then Schlumberger. Between those three, they absolutely make up over 40% of the actual index here. And what ExxonMobil has been doing is just simply been consolidating at the highs out here. So far this morning, back with 1.1 million shares, going into 12 million shares out there. Not too bad volume here just in the first 30 minutes of trading out here, but not really yet giving any kind of sign of giving up the ghost or anything. That was on ExxonMobil. Let's go take a look at Chevron. CVX is the ticker symbol there. See what that is doing. Also looks like consolidating at the highs. Again, let me just refresh my screen, make sure my system is picking up the proper data here. So also consolidating at the highs here, not giving up any ghosts. Let's take a look at the third one just to round it out. Schlumberger, SLB is the ticker symbol there. Also doing the same. Now if we take a look at Schlumberger, let's make this chart here a little bit larger. Schlumberger coming back and testing a swing point on September 4th that had 7 million shares. Let's see, as it was coming back and testing that on the 26th, only had 5 million shares out there. Then yesterday trying to get out. That can't be right. Yeah, 6 million shares yesterday. So far, thus far, 516,000. Folks, stay tuned. Tom and I will be up next for the Bull-Bear Binary Option Hour, sponsored by Nadex. And don't forget, we've got a great workshop. You can attend that live tomorrow in Tampa at the Grand Hyatt. Have a fantastic Friday. Remember, folks, what you think, folks, is what you become. And I think you're amazing. Take care, folks. Have a great weekend.